Facing criticism of insider trading, Coinbase has listed the 50 projects which are currently under review for listing on the exchange. Over the last week, I've been looking at each of these projects, and I'm going to talk today about 3 of the projects which I think are the most interesting. At the end of the video, I'll show you how you can find and track wallets which are potentially trading on insider information. My name is James Bacciuni. On this channel, I create content about digital assets and blockchain development. I'm not a financial advisor, this is not financial advice. It's widely understood that in crypto markets, insider trading takes place. What you don't expect is for it to take place in a publicly traded company. Coinbase is listed on the New York Stock Exchange, and you expect them to hold higher standards. This doesn't mean that Coinbase themselves are insider trading or their employees are. It could be a data leak or an API or whatever they use on their content management systems for editing their blog posts. But in the past, we can clearly see from the on-chain analytics that there's token appreciation before the public announcement of new Coinbase listings. Now, facing criticism over this, Coinbase released this blog post on April 11th detailing how they're going to increase transparency for the new listings of digital assets. This goes through 50 different tokens, which is currently under review for potential future listings. I was quite surprised going through this list how many of them are very low market cap or they haven't really gained any traction yet, and it doesn't seem to have found any product market fit. There's also quite a lot which are older projects which have been going for some time and they really haven't gained any traction so far, and it's difficult to understand how they will gain traction in the future. I'd say that half of these projects I hadn't heard of before, so it's quite interesting to go through each one individually. I wrote a little analysis of it in a blog post linked to it in the description. In this video I'm going to talk about the 3 that I found the most interesting, starting with BitDAO. BitDAO is one of the most established projects that I looked at, and for this reason I think it's one of the most likely to get a Coinbase listing in the future. Tie that in with the fact that there's a lot of VC funds involved, people like Peter Thiel, Dragonfly, Pantera, Jump Capital, Founders Fund. There's a good mix of Silicon Valley and crypto native VCs here, and they're all involved in supporting this project. I also think because of that, then the legal and regulatory framework that this company is using is probably going to be in a more advanced state than some of the other projects that are on this list. The concept behind BitDAO is that it deploys capital for long-term gains within the crypto sector. One of their early partners was Bybit Exchange, and they took a token allocation in return for a commitment of 2.5 basis points per trade from that exchange. So every time someone makes a trade on Bybit, some of them funds go to the BitDAO treasury. The BitDAO treasury currently stands at $2 billion. That's roughly 50-50 split between the Bit token itself and third-party assets like ETH and US dollar stablecoins. The next project that I think has a lot of future potential and may end up with a Coinbase listing is IndexCoop. This is something that I've looked at in a previous video, but since then they've actually been innovating and come up with a new product which is starting to gain a little bit of traction. ICETH is interest compounding Ethereum, and this uses Lido and Aave to build up a leveraged position on staked Ethereum. How this works is that Aave accepts StETH as collateral for borrowing on their platform, and we can build up a 2.5x position, and that's auto compounding using SET protocol. I think staking is going to be huge this year, and it's going to be a big talking point when the merge takes place and Ethereum goes across to a proof of stake network. I think there's going to be a lot of people looking to deploy Ethereum, looking at ways to gain access to this trade, and this is going to be something that adds a lot of risk to that, as opposed to just staking Ethereum, because it's adding a lot of different layers on. But it's going to appeal to a certain people that want to take a leveraged position on staked Ethereum. There's a potential for this to gain traction for IndexCoop alongside their standard set tokens and future innovations. It's nice to see the team are still building and innovating in the space. The next project I'm going to talk about is SwftBlockchain or SwftCoin. This is one I have mixed feelings about. If we launch the app, you can see we've got this cross-chain bridge. It looks like a standard automated market maker. Let's connect the wallet up. You can see the sheer number of different blockchains that they've got available. There is more chains and more digital assets here than I've seen on any other cross-chain bridge. For that reason, I think it's quite likely, without looking at the technology behind it, that this is quite a centralized service, and that does raise some security concerns. I think what's happening here, I don't know this for sure, I haven't looked into it, I couldn't find any open source code, but I think there's basically a central server which is accepting transactions and then pushing them out to the different blockchains. Well, that's not really in the ethos. It might actually work against them with a Coinbase listing, because one of the things they say they want to promote with new projects is decentralization. I think this is such a compelling product because this makes it cheap and easy to zip around different payments across different blockchains and different digital assets for relatively low cost. And the average transaction time is 3 minutes on this. And we've seen before in the past that a lot of end users don't actually care about decentralization. If it wasn't for that, then Binance Smart Chain wouldn't be on this list. Well, it's obviously not going to be for everyone. There is a compelling product here. And I think that they're obviously still innovating. You've got this new NFT. Assume that's some kind of wrapper to transfer NFTs across different chains. I just saw today they got a KuCoin listing as well. So they're on centralized exchanges as well, or the SwftCoin token is. The token is used for lower transaction fees on this bridge. It's certainly something that I'm going to keep in mind as a potential way to transfer assets across different chains and across different tokens if I can't find a decentralized way to do that. Now let's look at some of the ways that we can identify and track wallets which may be trading on insider information or have some kind of alpha where they're getting into the markets very early. So if we go to the Coinbase article, this will give us a list of token contract addresses. We can take these contract addresses of some of the lower market cap pairs which don't have that much trading volume normally and pump them into DEX tools and get the most traded liquidity pools. So we're going to be looking at the DEX trading pairs for these assets. We can then scroll back through the transaction history. We can go all the way back and maybe identify wallets which traded before the information was publicly available. You can see here that this is a buy, but this was actually carried out by a bot or smart contract. That might be an MEV bot or something that was following a momentum strategy because there was a lot of trading taking place on this token. We can then open up some of these buy transactions in Etherscan and see what other kind of transactions this wallet has done. Are they holding other coins in that list, for example? If something's holding a lot of the different tokens from that Coinbase exchange listing, that's either a very strong coincidence or they had some information on what products that Coinbase was actually looking to list and they knew that this article was about to come out. Once we have some addresses that we want to look at, we can then monitor them addresses. You can do this on a number of different platforms. You can use DEX tools on Nansen, I believe, or you can just write a simple script in Web3, or I'm using Ethers here. You can see we've got the target address here, which is the address that we want to monitor. We're then using the transaction count to find out how many transactions this wallet has done initially. And then every minute, we're just going to monitor that same transaction using the default provider to find out if there's a new transaction that wallet has taken out. And if it has taken out a transaction or it's done a transaction in that time period, it will fire an alert. And we could link this up to a Twitter bot or an SMS alert or whatever kind of alert system you want to use. Here I'm just using the console log to provide a link to Etherscan so that you can go in and have a look at that transaction. In just a few lines of code, this provides a simple way for monitoring wallet addresses, which we think might be useful for making trading decisions in the future. The code for this and the full write-up is in the blog post linked to in the description. Note that I haven't got the conviction in any of the projects that I've spoken about in this video to take out a position at this stage. So make of that what you will. Remember, I'm not a financial advisor. None of this is financial advice and you should do your own research. I hope you found this video informative and interesting. Please hit the like button for the YouTube algorithm and consider subscribing if you want to learn more about decentralized finance. Thank you for watching.